Welcome to this video. In this video, we're going to cover some of the basics around putting an entry when you have decided a direction based upon the price action around a local or a 4-hour vPOC, or also relative to the daily vPOC. So in this video, we're going to cover a few things. We're going to cover how to look at price action when the price arrives at a high volume node or a relevant vPOC, volume point of control. And then when would be the right time to take a position, whether it's a long or a short. And then what information you want to have to confirm that the direction is continuing to hold that first. And likewise, or conversely, we would like to look at what information will tell us to get out of the trade. What information is going to show us that this trade is no longer working. And finally, it's important to also look at where would be the right place to put a stop, even though we have some intel about where it may not work out. We want to put a stop in place in case of volatility, in case it gets wicked out. So I'm going to cover those 4 points in this video. If you are taking my coaching lessons, we may have already covered in more detail how to assess price direction around a vPOC, around local vPOCs, and how to interpret the delta volume profiles. So this video assumes that you have already covered some of that material. But let's dive into it now. So when we're looking at vPOCs and how the price responds around these volume nodes, basically what we're trying to do is determine whether or not the market has accepted that price and will continue to go higher, or whether the market has now declined below that price and accepted to trade lower. And what happens usually is when the price goes above the vPOC, the market will continue to go up until it sweeps some zone above that vPOC. So in this case, I'm showing you a 4-hour vPOC right here, a high volume node, and we already have the delta profile established. So I can rewind this to show you what it looks like. But right now we can see when the price goes above here, it's established a support. Often or not, this moves up to sweep some other liquidity because the price has been accepted. And likewise, when we go below the vPOC, what happens is the market then retests that volume point of control. And often that can take some time. It really depends on the time of the day and other factors. So that's another caveat. But assuming that the price has rejected and it's come down, say the second or third time, then we can see the price comes down. And in this case, it's sweeping all of these buyer deltas to fulfill this gap here. So that's not always clear where it goes. We can cover that in a separate video. But in this case, in this video, what we're looking at is how to confirm that this is actually going to go forward or go higher, and also confirm how to go down. How do we know that's going to go down? So what you don't want to do is really get into the position before it reaches that volume point of control. For instance, we can see right here, price is going up, and you could try to scalp that first reaction. It can give you a few points, but it's often difficult to know exactly where it may come to. And you can see as soon as it comes back, we have a retest and it rejects here again. And sometimes when it fails to reject on the third time, we will see the price shoot up, and it will effectively go to a place where the market has some residual deltas. So in this case, it's sweeping the stops from this prior high. And that we can use some fibs, or we can use the order book, or we can use gamma levels to determine how far that goes up. And that could be another video to follow. But effectively what we're looking at here is the entry, how to decide when to enter. You can decide to enter here early to reject. You can decide, oh, I'm going to let this go up, and then if it establishes support, I'm going to take that first move. But often the smart move is to wait, and I know it's very hard to wait 20, 30 minutes, sometimes even an hour, for it to come back at least one time to really close at that vPOC. So you can see in this instance, we're at the all-time highs, prices come up, we reestablish support. This might be a good spot to take a long and then aim for our target. So the target, again, we can cover in a subsequent video, but then you can place your entry like so, assuming we have identified this high area. And then it's just a matter of deciding where to put the stop. And then as soon as it comes back down, you can see retest. If you put your stop rate at the break even, more likely not, it's going to come back down to at least somewhere around or above that VPOC, and you may get stopped out for break even. If you have some rationale for this price to continue to go up and you want to hold this position, then usually you want to have a stop very tight right below that volume point of control. So in this case, if you were to take a long here and you were to let this go forward, assuming this volume point of control, this volume delta volume profile is representative of how the market traded, you can see there's a big stack of buyer deltas below here. So you would ideally want to get stopped out before it comes down here, because what typically happens is as soon as you enter this delta, it will sweep this entire bunch. And in this case, we can see there was some selling here from a previous previous wick down, and that trapped some sellers. So this created a seller imbalance right here, and then the price climbed above it. So what that tells us is right here we have a local node or a local VPOC where there are some sellers underneath that node, and then above that's all buyers. So ideally you try not to be below all these buyer deltas here, because it may get swept out. But if you do want to see that continuation, the first spot may be right here to put a stop loss. So sometimes I'll mark it on my charts, but I would say this would be maybe an initial stop loss you can consider using. So I may put a stop loss bar here and drag this stop to here. So assuming we got in at this blue arrow, what you may want to do is use that stop loss using this primary delta that's from the prior sellers. Let this move forward, and once you believe that it's reached more than half of the distance or a fair ways away, usually we look at the prior highs here as a place of resistance. Then you can maneuver your stop loss, or move your stop loss basically, to break even. So let's say this price moved up here, then you could put the break even stop loss there. And then ideally you've taken some of the profit up here, otherwise it comes down, you don't lose any money. That's the best way to manage your account. Make sure that the funds don't run dry just because you let it go. Now if you put your stop loss and you don't move it, you leave it down here, well, effectively you lost a little bit of money, and it's not a big deal, but those may add up. Like it's 3 points here, 3 points here, and you say you do 5 or 6 trades, that can be 15 points in a day because you were not being very stringent or very conservative on managing your capital. So ideally, if you get into the position, a position on a bounce off of VPOC or a continuation, you really want to evaluate how big this gap is. Like sometimes this could be very, very big. Sometimes we have a nice notch here, and not every confirmation of a move necessarily means you should take the trade. And so that's really something you may need to observe over time, is whether or not it's easy to place a stop loss. So I'm going to move on to another example here. Let's just go back here, and this one is a bit easier because let me just change this so that all the dots are out of the way. This is an instance where the prices come up to a daily VPOC. So let me just rewind this so that we see what we want to see right here. So the prices come back up, not quite there. Let's move back one more. Right there. So in this case, we come to the day there's a big squeeze, and so you get to the chart and all of a sudden you see this big move, and often we're looking at a big gap up or big gap down, and price gets to one of these naked VPOCs. So a VPOC that hasn't been retested in the past. You can see here on this sell-off on Thursday, the price came down, consolidated, and it kept coming down, leaving the highs up here untested. So this left a naked point of control and essentially a lot of sell delta. So here on my cursor, we can see there's quite a bit of sellers there was quite a bit of selling here, leaving an imbalance, and therefore once price got back up to this notch here, you can see price moved quickly. So the question here is, what do we do here? Do we get in right away? Do we go scalp? And a lot of times with this amount of momentum, you don't want to get in right away. Like we said earlier, you want to wait, let the market jostle around that price, because often the algos, even if they're there, they're not going to be able to hold it to the tick a lot of times. Sometimes there's some imbalance we don't see on the green side, and that might get us in trouble if we assume this is a concrete wall. You can of course look at the book and so forth, but the best thing to do is to wait for a local structure to form here. So I'm just going to press play here and let this move forward. Well, we can see right there, the price came down right away. This happened to be the CPI day, but it was kind of an example that I wanted to show here. And had we thought this would go long, we would have been trapped here. Had we taken the short, it would have been probably a bit late to get in. So you might see this come right back up to this eventually. So I'm going to let this go forward again. So even though that was CPI data, it was really big moves. You don't need to get in right away. It's 30 minutes, and you can see now the price is coming back up. Even though it's been like, that was a 50-point range. That was pretty wild. Sometimes you just gotta wait it out, and you can see price keep coming back up higher. And that day cleared. You can see it's still continuing. So that's been about 2 hours since you didn't take a position on that particular vPOC. And we can look at the other ones here as well. But now you can see finally prices come back up. So I'm just going to draw a box right here. So for every vPOC, even the ones that get rejected like this, we have a big retest. So this is a retest zone. So this is where we get most of our information. The first one, we usually see some reaction. Doesn't mean it's going to set the tone for a while, but that's one way to trade, is to scalp right away. And then if you're trying to get in on the re-entry of that vPOC, this is what we want to see. We want to see some consolidation. And then you can load on the lower time frame vPOCs. I'm going to throw on those 1 hours. They're showing up in orange. And you can see right there, we have, I'm going to pause it there, we have a new 1 hour vPOC that established just below this 4 hour vPOC. So this gives us some information to say, okay, now there's confirmation by the market that we don't want to trade right away above that node. So we're coming down below. We swept all these sellers, we're coming down a little bit. So what we can look at here is there was quite a bit of buyer delta, residual buyer delta from this short squeeze, and there was this 1 hour vPOC. So if you got in right here, where we had a rejection here, a follow through, and then another rejection, let's say we got in right there on the 1 hour, that would probably be the safest spot, even though it took some time to develop out of all of this move. So it's not very big, but what you can do then is to lean in on this one position here, put a short entry, slide your stop, and in this case I put my stop right at that 4 hour vPOC. Or if you want the net residual imbalance, we talked about earlier, the nearest sell delta. So right here there's some sell delta on this move up. There was some sweep, so you could be very safe and put it right here. And I'm just going to draw that out right there. So the very initial one I would put right there. That's kind of our last stand. I wouldn't want to go naked and have no stop loss, because that's what usually gets us into trouble if we just kind of randomly put $1,000 stop loss. So in this case it's 5 points, so it could still be $1,000 depending on your size, but let's say we use 5 MES, 5 times 5 times 5, that's 100, that's about $125 loss. So it's not too crazy, right? If I did my math correct. And then you can take initial profit here, and then you can see it. If it breaks below this local 1 hour VPOC, then perhaps we come down a bit further to this big block, maybe this residual NVPOC. So let's leave that there and see what happens. I haven't studied this point here, but at least you got the 3 points here, and then you let this new 1 hour establish. Okay, so then you got 3 points there. And one thing to note here is our stop is still not taken out yet, but as soon as it comes up to here, we usually get another pullback. So that's when you want to pull your stop loss right away to break even. So maybe I move it down to here now. So the whole point of this video is to show us where to get in, and then if you get in, where to put the stop loss, so that we would never, basically never get any losses. If you put one tick, you might have still a little bit of profit, but we're never going to lose any money. So in this case, you can see it comes back up, retest that VPOC again. So this 1 hour VPOC held, you can get 3 points there. That would have been enough, I guess, for a trade. You don't really need to take a trade for 1,000,000 points every time. So now I'm going to do one more instance. So we covered a couple instances. The one where we break down and we lose the VPOC, the one where we come up, we reject, and then we want to retest it again. And then I'll do one more quick one here where I'm going to show you price finally rejecting completely. So I'm just going to scroll up to 15-minute here just so we can see the chart. And it really depends on the range you're using. I'm going to switch back to the 5-minute, and I'm just going to choose a date from last week. Yep, right here. So this is from September 17th. So what I'm looking at is something like this here. We have a retest, rejection, follow through, and then we establish a new 4 hour, breaks down and follows through. So this is a daily VPOC that it came down to. But again, the same situation here. What I'm trying to emphasize is where to put the stop. So usually we're not going to be there for the whole case, but let's say we are waiting for that 4 hour VPOC, this one right here. Now, we mentioned earlier, we can try to take the scalp right away. If you take the scalp right away off that VPOC, you really have to be careful that it can shoot up a little bit. So you can see here on the very left here, there's some residual buyer deltas and some seller deltas all mixed up here. Now it's not very clear on this one how far it would go. There's some sell delta here, and then we have a notch here. So sometimes you may get away by putting a stop loss here. Sometimes you can put it a bit higher. I would say on this case you could put it right up here where we have the big block of 256 of trap buyers. So if we were to scalp this one, just like you did in the last one, that was a CPI day, that was probably a bit harder. But if you put the stop here, that would be probably a spot that would be safe because you have a big notch that's been previously tested above as well, and you just keep looking to the back. There was some more sell delta right here, so that would be a good spot to put it, and then you could watch it go down past the 1 hour and then watch it reject past the 1 hour, and then once again shift your stop loss right away. So it's always about managing your stop loss. It's more important to me to manage the stop loss than to manage the target. I don't really care as long as I have my stop loss right. It can go very far, it can go for 1 point. But if I don't have my stop loss, I'm losing my money, and then that makes it harder and harder to grow your account. So the very first thing you should worry about when you get to a reaction about the VPOC is thinking about where you can put your VPOC and when to move, where you can put your stop loss, and then when is the right time to move your stop loss. So you can see right here, it rejected off that line, that 4 hour, but it took some time for it to really come down below that 1 hour. So often I would say wait for it to come down to sweep some of these buyers here, let it come back up. So we see it came back up here and got rejected. So I would then move my stop loss to break even on this rejection. So in the last case, I waited for it to come back up to the vPOC. You can see it came back up to 4 hour right here, got rejected, let it come back up here, and then we have another lower high. So that's really when I want to move this now to break even. And then whatever happens there, you're golden, right? You're protected. Calculating the distance we can do in another video, but it's really about managing your stops, managing your risk. So I'll stop there. I'm going to add a number of more videos on this thread as we go. It's going to be the same thing over and over. I'm going to hammer where to put the stop for this vPOC, where to put the stop for the 1 hour, so that maybe it may help you to practice thinking about stop loss placement first and foremost before you think about targets. Alrighty, hopefully that was helpful. Put your comments in the thread if you want, or DM me directly. It'd be fine as well. Okay, have a good day.